Good morning, every day. Another glorious day in the South Central Plains is about to be given to us. Temperatures forecast to be in the 80s, and then tomorrow we're supposed to have a high of 56. So rain in cooler weather. Hopefully we get the rain out of that. I can handle the 56. It sure would like to get some rain. So here we are, Thursday, auction week. And yesterday's announcement by the Fed that concerned about worldwide economic growth, concerned about possible slowdown in our economy. Interest rates will be kept low for a long time. So the rise in interest rates is later rather than sooner. Fed support for the market continues. Buy stocks, buy bonds, and both the markets rallied, and rally they did. So the market just exploded up yesterday. Neither the financials haven't given up any. The indexes have kind of stalled. The only stock market around the globe that sold was Japan's. China's markets were up, as were the EU's. The EU's and UK's stock markets weren't up all that much. So equities are higher off of loose Fed policy. I'll put an article up here when I get back to it that shows how every national bank or central bank in the world is lockstep with low interest rates. It's showing the issue of the 10-year bonds. So as long as everybody's doing the same thing, this game of musical chairs continues as is. Fed support for the equity markets, that extra money that's not being made in loans and that's not going to support economic growth goes into the stock market, and here we sit. So we are high and moving higher. Now my guess is that after jobless claims gets out of the way, that the focus will go back to the direction of the E-mini, and then the dynamics of the 30-year will kick in. We've had the both auctions. Yesterday's auction took place at 31. The auction before that took place at 29, so my guess is we'll auction today well above 126. And where might that be? A couple of areas right here. This 22 area's got some volume. This 18 area. So this 18 to 22 area to me represents a good place to get long. And then the last rotate down stopped at 14. So 12 to 16 will be the backup buy. So this say 23s to 19s be the first buy. Second buy will be 23 to 13. Very, very aggressive on the buy side. Would like to do it as close to 20 as I could, but it is what it is, and the market is trading higher. Now, quite often, if it weren't for the 30-year auction and the with no major news on top, quite often we see the high set right before the day session opens. So I think we're going to get a pullback after the day session's open. They might catch some people short from yesterday. They might make them buy out on the day session opening. But so selling failure to take out 27 to the buck, I think, is a great trade. And then 3 to 7. Jobless claims at 293. Wholesale inventories at +3. Natural gas inventory at 108. Direction of the E-mini is probably the biggest factor we have today if the E-mini starts to sell. Remember the day before yesterday it was down 273 points. Yesterday it was up 275 points. So the direction of the E-mini is, I think, going to be a big part of today's trading. If the E-mini starts to sell today with some momentum, that can make prices higher. If the E-mini holds its gains and rallies, probably see selling against 127 and pretty good buying in the 126.16, 126.20 area. 30-year auctions, toughest piece of paper to move. We're well above where the other two auctions took place, basically at just below 126. So anything above 126 will be considered probably a fairly successful auction. Yesterday's 10-year auction did not get rave reviews. But again, the importance of you cannot trade unprotected. You just cannot ignore the risks that's involved in trading today. And yes, you may not like your fill, but you're out of a losing situation. And you have to take care of yourself. You just cannot forget that. And great volatility in all markets. You just don't have to worry about in trading gold and crude oil. You got to protect yourself. You got to be alive to trade for another day. Okay, looking at the 30-year right here, I'm going to sell failure to take out 12 to 16, and then 19s to 23s. A lot of what happens today will be tied to the direction of the E-mini. The breakout came at 01. We're at 10 right now. First buy is 1 to 5, and again, I'd like to do the best support to me is in this 24 to 28 area. So I'd like to get, well, let's just do it that way, 29 to 1 for buy 1. On the idea that they might sell it, then 21 to 25 for buy 2. And we'll put a question mark at 5. A lot of it just depends. They run it up into the day sessions opening. And quite often on a normal day, without the dynamics we face today, that would be the high. The high of the day would come right before the day session opens. Gold rallied overnight. The world's falling into recession. Governments will be borrowing money as they have been doing. They will be printing money, hoping that devaluation of the currency over time makes the payback in their currency half of what it was. But, you know, if you have 2% inflation and you can keep it at 2% inflation, which governments like, you cut your debt in half every 50 years. That's a good thing as far as governments are concerned. Okay, resistance is 30, 32. It's a slow volume area, sell 1. And 35, 37, sell 2. The reason is gold is up is printing money around the globe. The breakout came from 25. We're currently last trade at 30, so 25, 27, pretty aggressive, buy 1. And then 20, 22 for buy 2. So the fundamentals actually favor higher prices in gold, and that's what we're seeing. Looking at the euro, why is the euro up? Because our central bank yesterday said they're worried about the strength of the dollar. How does that translate into currencies? Our central bank will be working to weaken the dollar, buy the euro, buy the yen, buy every other currency, sell the dollar. And central banks don't have a lot of luck over time stopping currency rallies or devaluation. They slow the process, but the currencies will go to where they're going to go. So 95 to 05, sell 1. Then 20 to 30 will be sell 2, picking up this low volume here, area right here. On the buy side, 75 is the trade, so 50 plus or minus will be buy 1. And then 20 to 30 will be buy 2. Longer term, I think we've got a short, going to be setting up nicely. In the euro, but I don't think it gets today. So the market will go up until the shorts have been squeezed as much as they can handle it, and then when the last short is covered, the market will be set up to sell again. Markets go higher until the last buyer is bought. They go lower until the last seller is sold. Long liquidation and short covering. A short covering blow-off rally is usually how these end. Okay, the fundamentals were not good for crude. The world's economy is slowing. We know that supply is increasing. Canada, the United States, even Russia's increased their production, and Saudi Arabia is the only one that has shown that they can cut back without being forced to do so. Everybody else will be forced to do so, and Saudi Arabia has entered that stage of pricing in their production where they will fight for market share. Now, when OPEC fights for market share, they don't care where the price of oil is. They want to make sure that 25% of the world's oil demand is theirs, or 14%, or whatever it happens to be. So they'll maintain that 14%, and they'll do that by discounting prices, and that's when it can get ugly. Have a new distribution that started down out of the 75 area. Last rotate up stopped at 36, so this 25 to 50 is sell one. Very, very aggressive. Sell 2, 75 to the buck. I think we're going for stops down below, so we'll make 25 to 50 buy one. I think ultimately now we're headed for 85, and then 86, 86 and a quarter for buy two. There's a lot, you get used to a current lifestyle and way of living, and then, the world upsets your apple cart, and you've got to readjust. And the producers of raw materials are usually the first impacted. And if you're in a country that has one export, let's say copper, or one export called cocoa, or one export, called crude oil like that, if you have not been saving for a rainy day, and if you've been spending like there is no tomorrow when these times come, it's a very, very painful adjustment. The dictators usually in these situations are the leaders of the countries, usually in a one-election vote. They will sell their commodity at any price just to make sure that they have some cash flow. And naturally that cash flow goes to the people at the top. It's the way it is. And the people at the bottom have to fend for themselves. We're seeing pictures coming out of these countries where Ebola is running wild, and you're looking at poverty right there. You're looking at people that really can't even afford the plastic to bury these Ebola victims in, and you're looking at corpses left in the middle of the road. You're looking at people that don't want to pick them up and carry them and bury them because they might get what they have. So it takes a lot of money. I mean, one of the things I noticed when I traveled around the world, that the countries that had a lot of money were the countries that it was clean outdoors. The city streets were clean. You could eat the food. You could walk around and not get in trouble. In the poorest countries, I mean, people were, they would look at Haiti. They would cut down every damn tree they could cut down for cooking fuel. And they would trash their environment, and that's due to a lack of money. Okay, here we are on the E-mini. Remember a couple days ago we sold 69s to 71s? And then yesterday we came in hoping to sell the 34, 36 area. Or I forget where it was, or maybe it was 55, 54, 56 is where it was. we retraced all of that. So I think this little area right down here, 50 is pretty key. And then we have the L at 48. So 50 plus or minus by 1, and that's on the assumption that they're going to enter the top of value, go down there and kind of spook the market. Then our 45, 47 will be buy 2. The news yesterday was not bullish from a fundamental standpoint for the stock market. The economy is slowing, and we're over leveraged. And companies have been buying back their stock to make sure their managers are compensated. Remember that law of unintended consequences where you couldn't pay your managers more than $1 million without kicking off a tax? So all the compensation comes from stock ownership or transfer of stock based on certain formulas to your top management team. And what do they do to make sure that they get paid what they think they're worth? They buy back their stock as opposed to saving for a rainy day. So our corporate balance sheets are not in as good a shape as a lot of people think that they are. So here we are. We're going to put buy 1 at 50, 52. Going to go get stops below the buck. 48 is kind of a key number. If we take out 48, that will not be a good trade. And then 45, 47. On the buy side, on the sell side, 59 to 61. And then 64, 66. It'll take about 20 minutes to get everything up and posted. I'm going to get busy on that right now, as fast as I can. Be back with you as soon as possible. Later.